So you've probably heard people talking on the news. The market is up today, or the market crashed. It sounds, really important, but what does it actually mean? It can feel like this secret language that only a few people get. Well, that's what we're going to do right now. We are going to break it all down, piece by piece, so you can finally understand what's really going on. First things first, when someone says the market, what are they even talking about? I mean, is it some actual building on Wall Street? Is it a super complex website or, I don't know, some kind of exclusive club you need an invitation to? Let's figure it out. And then you've got the big one, right? Is investing in the stock market just a fancier, more complicated way of gambling? Are you just taking your hard-earned money and pretty much rolling the dice? We're going to see if there's really a difference. And finally, what about this idea that you've got to be a millionaire to even think about investing? Is this whole thing just a game for rich people? Okay, we are going to tackle all of these questions head on. By the end of this, you're going to have a clear, simple understanding of how all of this works. All right, let's start with the absolute bedrock of the entire system, the stock. For just a minute, I want you to forget all the complicated charts and all the weird jargon, because at its core, this concept is actually surprisingly simple. That's really it. A stock is just a tiny, tiny piece of ownership in a company. So when you buy a share of, say, Apple, you're not just buying a blip on a computer screen. You are literally becoming a part owner. You own a tiny fraction of everything, their iPhones, their stores, the whole shebang. But you might be asking, why would a big company do this? Well, imagine a business wants to get bigger, maybe build a new factory or invent the next big thing. To do that, they need cash. So what they do is sell off tiny little pieces of the company to the public. When you buy one of those pieces, that's a share or a stock, you're giving them the money they need to grow. And here is the absolute key. Your success is now tied to their success. If that company does well and becomes more valuable, so does that little piece you own. Okay, so if a stock is just a piece of ownership, why on earth do the prices jump around so much every single day? This is where a lot of people get confused, but the answer really lies in a basic idea from economics you probably learned in school. It is all about supply and demand. Think of it like a giant auction. If way more people want to buy a stock than want to sell it, all those buyers have to start competing, right? They bid against each other and that drives the price up. But if it's the other way around and everyone is trying to sell but there are very few buyers, well, the sellers have to lower their prices to attract someone, and the price goes down. It really is that simple at its core. So what makes all these people want to buy or sell at the same time? Well, it's not just about numbers. Of course, things like how much profit the company is making or what the overall economy is doing, those are huge factors. But you know what else plays a massive role? Plain old human emotion. A scary news headline can cause a wave of panic selling. An announcement about an exciting new product can create a buying frenzy. The stock market is really driven just as much by psychology as it is by finance. Alright, so this is the part you're probably most interested in, right? You own a tiny piece of a company. How does that actually turn into real money in your pocket? Well, there are two main ways your ownership can pay off. The first way is the one everybody thinks about. It's called capital gains. You buy a share for, let's say, $10. The company does great, and a year later that share is worth $15. If you sell it, you just made a $5 profit. Simple. The second way is through something called dividends. Some really established companies will actually share their profits with their owners. It's like they send you a little cash bonus just as a thank you for being a shareholder. Okay, so this brings us right back to that huge question we asked at the beginning. Is this whole thing just one big casino? And the answer honestly comes down to your approach. Your mindset is everything. Let's look at the difference. Here's the key difference. On one side, you have a gambler or a speculator. They're trying to make a quick buck, maybe based on a hot tip or just a random hunch. They're betting on what the price will do today or this week. But an investor is completely different. An investor is buying a piece of a business that they believe in, and they're in it for the long haul. They've done their homework, and they're willing to wait years for that company's value to grow. You see, the foundation is knowledge and patience, not just random luck. So, for pretty much anyone looking to build wealth over time, that long-term investor mindset is absolutely the key. It's all about playing the long game. And look, we have to be super clear about this. In the short term, the stock market can be a total roller coaster. I mean, prices go up and down for countless reasons every single day. That is exactly why it is such a bad idea to invest money you're going to need anytime soon. Investing next month's rent money, that is a recipe for disaster. This really gets to the core of a successful philosophy. It's not about trying to perfectly predict every up and down. That's called timing the market, and believe me, even the experts are terrible at it. No, the real power comes from time in the market. That just means buying into good, quality companies and then having the patience to let them grow over years and years, riding out all the bumps along the way. And that totally busts that old myth that you have to be rich to do this. That is simply not true anymore. Thanks to modern technology, you can get started with a really small amount of money. What's way more important than how much you start with is just being consistent, getting into the habit of investing a little bit regularly over a long, long time. So, when you boil it all down, what's the big takeaway? The stock market isn't a get-rich-quick scheme, and it's definitely not some secret club. It's a tool. It's a tool that lets you become a part owner in great businesses. Success here really doesn't come down to luck. It comes from understanding what you're buying, having the patience to let it grow, and the discipline to stick with your plan. So here's a thought. What's one company you already know and use every single day? That might just be a great place to start your research.